From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 20th, 2016. In just a moment, we'll be taking a look at the GBPUSD, the Great British Pound versus the US dollar. But first, I want to recap a couple of the trade suggestions made over the past few days. Let's get started here on the NZD-USD, New Zealand dollar, US dollar. We've been looking for opportunities to go short and sell this currency pair ever since capping out at the top of the chart into the 7,300 level. If you were with us last week, you'll know that we were selling rallies to resistance into the 7,300 level, and we've been following profit all the way down here on the chart underneath the red trend line that's at the top right hand side of the chart. There's been a couple of opportunities to get in, and once again today we've seen a third opportunity that we've taken to get in the sell here for the New Zealand dollar. Let's take it down to the 4 hour. I think this might explain it even better. We took the sell at the pink zone. It broke under the green zone. We didn't sell it there, but we noticed that it continued to show profit on the sells from the 7,300 level. Same thing underneath the blue zone. Then once it got underneath the yellow zone, we saw another opportunity to jump in yesterday, getting some profit on the next push down to the purple shaded area. Yesterday in the trade room, we discussed the opportunity to go short once again on any rally into the purple shaded area. So as you can see down here at the very bottom of the chart, I have a short at 70.50. That was posted on the notifications yesterday, 70.50 as an opportunity to go short into the purple shaded area. We're now sitting 22 pips of profit or so on the trade. If it continues to pressure lower, of course, we're going to target all the way down towards the 69.80 level. That's the orange shaded area at the very bottom of the chart. So take a look at the pattern of the trend. It fell, congestion, fell, congestion, fell, congestion, fell, congestion, and now we're looking for the next leg of the fall for the New Zealand dollar. So locked in profit, can't lose on the trade now. We're break even on the trade, but definitely continue to target all the way down here towards the 69.80 or so level, the orange shaded area here on the chart for the New Zealand dollar. Something we were looking for yesterday on the US franc was the breakout of the resistance zone. If I zoom it down to the 4 hour time frame, you can see this blue box that we've been studying here on the chart. We tried to take a buy down here. It's at 98.10, never met our pending buy order and just started going up without us. Now just kind of hanging out here underneath the 98.80 level, the purple shaded area. We still are waiting for the breakout here, looking for it to break 98.80 for the continuation of the uptrend. Again, we've been studying that here on the daily time frame. The breakout of that little blue box is what we're looking for here for the US franc. In a similar scenario, we've been looking for the breakdown of the 1.1 thousand level on the euro. Just has not done it yet, so still waiting on that currency pair as well. All right, let's move on over to the GBPUSD, Great British Pound, US dollar. Of course, we know that several weeks ago, the Brexit news caused this currency pair to fall dramatically. Then it went into a little period of congestion. That's the black box on the left-hand side. Then it broke out, made a new low, came back up, went into a similar period of congestion, black box and blue box kind of matching side by side here on the chart. So we've been inside this blue box, and we're looking for opportunities once again for the market to return in the bearish direction here for the GBPUSD. So we've been looking for opportunities to go short, rallies into resistance, or breakdowns of support. I think this is going to be much more intuitive if we go down here towards the 4 hour timeline. We get down here to the 4 hour timeline or a time frame, and you can see that blue box. There it is. Let me zoom out one more time. There's the blue box right here on the chart. Let's zoom it back in. You can see a couple of things here, and we've discussed this in the trade room over the past few days. The resistance high on the left-hand side, the yellow shaded area. The resistance high in the middle at the pink shaded area. The resistance high on the right-hand side into the yellow zone. If you were in the trade room yesterday, you'll note that I had a sell going into the yellow shaded area, the 32.90, 33.30 level, the yellow zone. That trade has been closed out with profit as it touched down here into the purple zone. Yesterday in the live trade room, we discussed the fact that if we were going to go short on the GBP, there were two factors that we need to look for. It either needed to rally back to the green zone, or the next thing we would look for would have been yesterday, of course, the breakdown of the purple zone. So those were the two things that we were looking for yesterday in the live trade room. Break of the purple zone to go lower, or rally back to the green zone to go lower. very similar to what happened here at the yellow shaded area. The risk in that scenario, of course, would be that it breaks back above the green zone and starts pressuring back higher again. So as it rallied here into the 3170, 3200 level, into the green shaded area, it became an opportunity to go short. And I'm in the short. I'm sitting currently about 16, 17 pips of profit. I would like to see, of course, the market target back down to the purple shaded area, which is our last support low. A breakdown there will target back down here towards the blue shaded area. So for the day today, in a similar fashion that happened here at the yellow shaded area, any rally into the green shaded area, into 1.3170, 3200, I guess it is, 13200. The green shaded area, if it rallies there, that becomes a selling opportunity. We'll target the purple zone, protecting profit as it goes down, and the risk is pretty clear. The risk is that it breaks back above the green zone. Stop loss is above it. Stop loss is, for me, is somewhere around the 3230 level, but of course you'll have to determine how much risk you're willing to put on the trade. But as long as it stays under that green zone, I believe this is our selling opportunity for the day on the GBPUSD.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.